March the 16th. The time right now, Singapore is 10:41 in the morning. And overnight on Wall Street, we see a bit of a rebound. That basically was because the Federal Reserve, together with the U.S. Treasuries and the FDIC, which is the insurance deposit, the Federal Deposit Insurance we call that corporations, basically came out and backstopped the measures to ensure that all depositors of the three affected banks will get their money, and that has created a sea of calm overnight on U.S. equity, but that was largely overshadowed by developing stories about Credit Suisse. In fact, Credit Suisse story has been around for months, but last night the share price of Credit Suisse at one stage fell 25% before it pulled back a little bit to close down 20% for the day, because its largest investor, the Saudi Arabian sovereign fund, has come out and said that they are not prepared to give them more money to basically avert a potential crisis. And now the Swiss National Bank would have to come out to at least, if not come to rescue Credit Suisse. I think it's too big to be rescued, but at least they are trying to put out soothing words to at least calm the market. So we can see that largely another victim of the very aggressive global rate hikes. This time we can see that a lot of undisclosed losses is beginning to bubble up to the surface, and this is, I think, maybe more than 100 times larger than the three banks that failed in the States combined, because Credit Suisse is a large global investment bank. So you can see that this will have a much wider implication for the global financial markets. To keep your eye on this development here. So by and large, you can see Wall Street actually rebounded, but I think this rebound is going to be illusional. I think eventually the chicken will have to come home to roost, and we'll probably see much worse prices in equity markets in the days and weeks ahead. Okay, so for now, the Dow Jones itself bottoms out at 31,429 over the day prior to yesterday. We can see that the market managed to crawl back to above 32,000 for now. Immediately, I think the market may have found a bottom, but I think topside will be quite limited. Eventually, the market would have to face reality, and that means it will have to come back down again. Okay, over in the S&P 500, we also saw a bit of a rebound, and this rebound may work its way up in the three-wave rally, ideally to target 3,966 to 3,975. Previous day, I was mentioning 4,000. Now I would have to lower down my expectation if there is a rebound back to 3,965 or 3,975. I think that will be a good area to look for reversal signals to position on the short side of this market here. Okay, the one that actually hold the market relatively well is the Nasdaq 100. You can see Nasdaq actually managed to end the day at the week's high. So this is actually quite interesting. After having gone down to 11,000, almost 700 points, the market right now is above 12,250 points. So this is quite a bit of a development overnight. We can see that this market again may possibly extend higher to 12,550 to 12,700 levels thereabout. If that is the case, again, look out for seller signal. But I think if you have a choice to short sell US equity index, this is probably not the best index to short sell, because it has exhibited relative strength relative to the other two major equity index like the Dow Jones or the S&P 500. So if you have to sell, or like me, if I want to sell, possibly I would not be looking to sell the Nasdaq 100 for now. Unlike last year, in which the Nasdaq 100 was leading the way down, this year we can see a bit of a sea change here. It has actually switched role with the Dow Jones. Okay, over in Asia, we can see in Japan, the Nikkei 225 continue to trade to the downside, and I think the market now is in that waterfall phase, whereby the fall is accelerating, and there's every possibility it will go down and challenge the 25,661, which is the year's low. So which is the year's low so far. So at the rate it is falling, it's pretty steep. Okay, and it does not look like it's going to be a good thing, despite that a lot of investors are seeking the Japanese yen as a safe haven, but they are definitely not seeking safe haven in equity markets, as we we can see in the Nikkei 225 here. Over now in Asia, we can see Hong Kong had a marginal low compared to Tuesday. So we have a marginal low for the week at 19,109 so far, and we're only at the first half of the day. In fact, we are only just beginning to trade in Hong Kong for the first hour. Not sure whether it can hold the line, but by and large, if there's going to be any rebound, it's likely to be kept around the 20,000 levels, maybe slightly more. And then I think the market is biased to the downside. My target remains unchanged at 17,400 to 18,000. Okay, so this is still my target range. Over in China itself, we can see the CSI 300 continuing to lose ground. Again, very, very similar structure to what we saw in the Hang Seng Index. Market is likely to drift lower to test the 3,865 to 3,920 levels. So I think immediate term, I think that there is no sense of a rebound. So far, we see the rebound can only manage yesterday up to 4,018 points, and the market now has come back down again. So the bias is to the downside for Chinese equities. Okay, when we look at energy market, we can see there was a major sell-off in crude oil prices. This WTI crude, it has taken out the year low at $70.02 and go down all the way to $65.64. This is a big move, and this is a reflection of the confidence of the global economy. Of course, when energy markets stabilize and go up, of course, it reflects bullishness in the global economy outlook. Now we can see energy prices has basically crashed to the year's low at $65.64. Is a reflection of market outlook in terms of the health of the global economy, and of course that is not helped by the crisis in the banking sector over the last week and this week itself. So it does seem that investors are right now in the crisis mode, not in favor of buying commodities for now. The only commodities they may be looking to buy is actually precious metals. You can see gold prices surge to $1,937.40 in the spot market. Now we can see a very clear 5-wave rally, and the market, if it can pull back, which is currently doing, to test a 1,885 level. I think that level should be able to hold. And if you want to pick up new position on the long side of the gold market, that will be one good area to consider. I may consider, although I still have a lingering fear that the gold market bottom may not actually be in place until possibly towards the end of April or early May. So I am a little bit hesitant to go in to buy right now, but I may test with very, very small exposure. Okay, over in the silver market, in the spot market, we see that the silver market has gone to a high of $22.39, and it has pulled back just marginally. Overall, we don't see the same kind of bullishness that we see in the gold market, but by and large, I think over the long term, silver could be a better play compared to gold market. Okay, so this is basically my opinion. You can differ, but I think there's a very good chance over the next few years, silver prices may actually outrun gold prices. Okay, now this is the dollar index. The dollar was actually looking to come off from 105.87 at the beginning of the last week, and now we can see prices are beginning to come down to all the way to 103, almost 103. And yesterday, because of the sudden explosion of reports, about Credit Suisse, now the dollar actually reversed direction because everybody is dumping European currencies, including the Swiss franc. Now, Swiss franc is one of the safe haven currencies together with the Japanese yen, because of the Credit Suisse story unfolding, and it is still unfolding. There is a exodus from the Swiss franc that allows the dollar to actually surge overnight. So this is the latest development. But by and large, we can see that the dollar do want to go up. So we will have to see how this story unfolds and how it will impact currency markets. Over in the sterling, you can see the sterling came off on the back of a general sell-off in European currencies, but it didn't come close enough to my buying area, because I wanted to buy sterling, because I do see quite a bit of potential on a relative basis. Okay, there is no safe currency, so to say, right now, because even as everybody is rushing towards the Swiss franc, up to yesterday, up to the day before yesterday, and now into the Japanese yen. The Japanese economy is also between a rock and a hard place, so there is really no safe haven currency to speak of. But based on the relative basis, I think there is still a potential for sterling to actually rebound. My original buying target is 119.5 to 120. Market came close enough, but not close enough. It came up to 1010, okay, just merely 10 pips away from my ideal buying price, and then it started to bounce. Hopefully today we may get another chance to buy if the market dip back again, but we have to see. Okay, over in euro, of course, as the dollar surged, the sell-off that we saw in the euro currencies in terms of euro has actually stabilized at 105 and started to rebound. And the rebound here will be very, very shallow because, again, the motivation right now is to get out of European currencies, and of course, euro is a major European currencies. So the upside is actually very, very limited. So I think the downside is still very much in play. The target remains at 104 to 104.50. Okay. Aussie market remains a little bit in a twilight zone because it's not going anywhere. Okay, the highest it traded was 0.67. Market went down to 0.66 marginally and then started to rebound. I think there's a potential for the market to do a three-wave all the way to 0.67. But if you can avoid this currency pair, do so, because there is no major move here that will warrant a large exposure. Okay, the currency of choice is actually the yen itself. As the dollar comes off the yen, of course, it is showing that the yen is stronger relative to the dollar, and that's because of safe haven buying. And we can see the yen may actually trace its way down to 131.11 or 131 levels. Okay, by and large, I managed to get in a short position yesterday afternoon, but I have two working positions. Only one got filled at 135, so I did manage to get into a short position, a very, very small exposure, and I just going to go for 131.10. Okay, over in dollar versus Canadian, you can see that the dollar actually rises, and by and large, you can see the dollar Canadian is actually quite bullish. But thereabout, I think the market has already retraced something like 78%. I actually managed to go in to sell this thing yesterday as well. Okay, because I think the market is due for a three-wave correction. Okay, let me see. Let me do this again. I managed to go in to sell at this level here. So I managed to go in and sell at one level. I have two working positions, one of which has been a long short, a short position which I carry forward for quite some time, and yesterday was a fresh short position. So I hope the market can actually do a three-wave, and if it does a three-wave, the potential for a market to go down based on technical consideration, forget about the fundamental, I think the market may have a potential to go all the way to 136. So I'm going to exit all my short position at 136. Okay. Over in, just to show you the impact of the Swiss franc, I never show you the Swiss franc. So the dollar actually rallied massively against the Swiss franc. It means the Swiss franc has been sold off very aggressively from about 91 cents all the way to 93 cents. So for a currency to move more than 2% is actually quite a big deal in the currency market. So we can see that the dollar versus the Swiss franc went up to a high of 93.4 cents. Okay, we can see that this may actually see a slight pullback before it goes back up again. So based on the dollar Swiss structure, it looks like we may see higher prices at least after a minor pullback. Over in cryptocurrency, while this is not a safe haven asset class because it's classified as risky assets, right now everybody is trying to get out of risky assets, including equity markets that we see, and of course cryptocurrency is definitely a highly risky asset class. And what is the reason that caused Bitcoin to actually rally from just under 20,000 to a high of 26,500? So this is of course on the back of the instability of stablecoin, and although the USDC has crawled itself back to almost $1, because at the lowest point on Sunday it was only worth 87 cents per dollar, and now the peg is almost back in place. But I think the damage is done. Everybody is a bit leery on stable coin, and because of that, we can see that there's a rush to go in to hold on the bigger coins like the Bitcoin and the Ethereum. So right now we can see that there's this pivot over from stable coin to the main cryptocurrencies like Bitcoin. So Bitcoin right now is pulling back to near just under $24,000, and I was hoping that it can come down a little bit more because I have a buy position that is still in place, and I hope to buy near the $23,800 for another run up, maybe $1,000 to test the $27,700 to perhaps $28,000. So I think this will be one last round before the market pulls back again. Okay, over in Ethereum, we see basically the same thing that we see in the Bitcoin, and we can see that this Ethereum itself do also have a bit of an upside potential. And my chart is not updating. I think there's a internet connection here a little bit poor today. But by and large, you can see that the pattern here that we see, okay, this is Ethereum. You can see that the market actually went up to test the $1,784 before pulling back. Again, this pullback has a very minor three wave, and if we use this minor three wave to actually enter a position, we may have already got a buy signal yesterday. So we will have to see how this thing develops. I currently have no position in Ethereum because I was caught on the wrong side of Ethereum. I basically cut my losses and lick my wounds, and so I'm not going to touch Ethereum for a while. But I'm game enough to go into Bitcoin, so I actually have a working order right now, resting just under $23,800. So there you have it. I will give you another update by tomorrow. So in the meantime, be safe. Bye bye.